Salam and peace. This is Imam Malik Mujahid, and you're watching Muslim Network TV on Galaxy 19 satellite, which covers the whole United States, north to south, east to west, with 57 million subscribers, mostly in rural America, Mexico, as well as Canada. We're also on OTT devices like Apple TV, Amazon Fire TV, Roku, and of course, you can download our app on your Android or iPhone or watch on YouTube. All you have to do is type Muslim Network TV. Our website is muslimnetwork.tv. Well, people have started talking about when a stock market is going to crash. And today we thought we should talk to someone who's a professional consultant in this area, not about when it's going to crash, but about financial advice. And also how individuals should guide themselves. It seems to be a whole lot of people investing. Some people are becoming millionaires and billionaires. So while on the street, people have difficulty finding food. Especially in my thoughts are people in Texas. I have one of my team members there who has given shelter to 4 people and is running out of food. And I'm thinking how I'm going to help him. So how individuals deal with the stock and this new type of phenomena of people chatting together and sort of invading the Wall Street and what are they doing, and cryptocurrency, what in the world is that type of a currency? Which pocket should I keep it? Inside my jacket or outside my jacket? Can I spend that money or just keep making money on it? Well, to discuss with us is somebody who knows actually how to ask right questions, which I unfortunately don't. Uh, with us is Brett Arends. Welcome to Muslim Network TV.
Great to be here. Thank you for having me.
Brett is an award-winning financial writer and has many years of experience writing about markets and personal finance. He's also a chartered financial consultant. Well, tell us, why do you believe that when it comes to investing, it's not how much you make counts? Because I thought that's the only thing counts, how much I'm making.
No, it's how much you get to keep.
Right.
Thank you for the introduction. I write for MarketWatch, which is part of Dow Jones, and I write specifically about, mostly focused on people saving for their retirement these days. I used to be a more general consultant, but more general writer. When I started out in this business many years ago, it was actually, I was a very young financial writer when the dot-com bubble came along of 1998, 99, and 2000. And it made a big impact on me. And I saw a lot of people make a lot of money, and then I saw them lose it. Now, I was very lucky during the dot-com bubble because I happened to make plenty of money, and then I thought, this is insane, and I got out of it pretty much before it collapsed. Here we are in 2021, and I got to tell you, it reminds me a lot of 1999, 2000. I have conversations all the time with money managers, other financial writers and financial commentators, and we're trying to work out whether how much this is the same and how much this is different. It is, the stock market went through the roof in 99, 2000, particularly technology stocks, all sorts of dot-coms. People made vast amounts of money. People you knew in high school were suddenly rich. I mean, not just wealthy, but really rich. I mean, they made $50 million, $100 million. And then over the next couple of years, it collapsed, and a lot of people ended up broke. And there used to be the joke, the phrase, during the dot-com bubble, there were the phrases B2B, which meant business to business, and B2C, which meant business to consumer. Those were two kinds of dot-coms. After the crash, the jokes were B2B meant back to banking, and B2C meant back to consulting. In other words, people had to go back to the jobs they had before the bubble. I'm particularly looking at Tesla right now. I'm particularly looking at cryptocurrency. The momentum is amazing. People are making a fortune, but you haven't made a nickel until you've taken a profit. And I worry that in some of these cases, the things that have gone up will come crashing back down, and people will discover they didn't make any money, or rather they didn't keep any money.
So, based on data, based on history, and mostly based on gut feeling, do you feel this is the moment when you came out of the market when the dot-com bubble was happening?
That is the multi-trillion-dollar question. Are we there yet? I don't know if we're there yet. The key thing actually is you don't have to get out right at the peak. The most important thing is to get out when the momentum turns. So the dot-com bubble peaked on March 9 of 2000. You didn't have to sell on March 8 or March 9 to keep all your profits. You actually had plenty of opportunities over the next 6 months to get out, because people kept saying it was a buying opportunity. The NASDAQ, I think, went down from 5,000 to 4,000, and all sorts of people were saying, oh, at 4,000 it's a buy, it's going to go back up to 5, it's going to go to 10. I remember meeting a friend who was a veteran money manager. I was living in London at the time, and we had lunch. I remember it very distinctly. It was in, I think, June or July of 2000, and the NASDAQ, having peaked at 5, was down to about, I think, 3,800. So it had come down quite a long way from the peak. And my friend Peter Bennett said, even at 3,800 or 4,000, this is the easiest sell of my life. Now, he was at the time in his 60s. He's since passed away, but he had been around a long time. And he said, even when it was down 20% from the peak, it was still the easiest sell of his lifetime, because the bubble had burst. So when bubbles burst, they tend to burst slowly. They don't. The stock market, the famous crash of 1929, didn't take place in a day. It took place over 3 years. And actually, the NASDAQ, the dot-com bubble, which peaked in early 2000, didn't bottom out, I think, until 2002 or 2003. So you don't get the peak profits if you don't sell right at the peak, but you never know when the peak is, and you make the most money right at the end. The important thing was that when things started to come down, some people got out, and some people thought that the party was still going and actually kept adding money. And those were the ones who really ended up, losing their shirts.
So, so in that sense, that what happened in March when it went down substantially, that didn't happen over a period of time. It happened suddenly. It didn't happen within a week.
Well, I remember the first couple of days when it fell, and I was in a news conference with people at my paper at the time, and various people were talking about a correction. And I said, I don't think this is the correction. I think this is the crash. There was a feel that it had finally burst. My point is that even when it starts to come down, there's actually quite a long period of time before it bottoms out. It doesn't happen all at once. There is a danger in getting out of investments too soon, just as there is getting out too late. But to be honest, if you are invested in anything that has sound finances, you're probably better off getting out of it too late than a bit too early. On the other hand, if you are in something which is potentially worthless, you probably don't want to be in it at all. I am still waiting 3 years, in fact, maybe more than 3 years after first asking, I am still waiting for anyone to explain to me what the actual economic rationale and need of Bitcoin is. I still don't know why Bitcoin is worth anything. I don't know what it's worth. I'm not saying it's worth zero. I just don't know what it's worth. If I had Bitcoin, which is now, I think, $52,000, although it's a wonderful trade and you're making a lot of short-term money, I have no long-term confidence in this asset, because I have no idea what it's worth, if anything. I still haven't heard a single good explanation of why Bitcoin should have value. People will tell you, oh, it has wonderful technology. Well, that's great, but that doesn't make it valuable. Why is it valuable? Why do I need this? Why do I want this as opposed to dollars or yen or pounds or euros or gold? Why do I want this digital thing? And why Bitcoin? So Bitcoin is an example of an asset in which I have essentially no confidence. It's a trade. It's a short-term trade, but I would not be an investor. Tesla is a very impressive company, and I was a long-time bull of Tesla when everyone was talking it down. But at the current valuation, it is valued at more than essentially the entire world car industry, or most of the world's car industry. The valuation simply makes no sense whatsoever. This, again, is something where I, frankly, would have no confidence whatsoever in the long-term investment potential of the stock. That doesn't mean that I think the company's a bad company. It just means that I don't understand why I would own this thing at $800 a share. On the other hand, there are plenty of stocks out there that I think are reasonable or not especially expensive, and which I would be less quick to sell.
So Tesla type of a stock is the one which probably will take 6 months from the crash, known crash, what people can say historically, to take somewhere more rational positioning in this stock.
I think 10 years from now, people will be looking back and they'll be saying, can you believe Tesla was $800, $850 a share? Can you believe that Bitcoin was $52,000? Now, I don't know this for certain, but I suspect, I remember after the dot-com crash, people were looking back and saying, why on earth were people paying these silly prices for these companies? I mean, there were all sorts of famous companies that had huge marketing campaigns and ended up going bust within a year. They were on TV, they were advertising in the Super Bowl, everyone was talking about them, and a year later they didn't even exist. You know, the poster childs here for me are Bitcoin and Tesla. I wouldn't take my life savings and sell the stocks or sell Bitcoin short if I knew how to do it, or if I was able to do it. I don't know for certain, but I have that they're going to go down, but I have no confidence whatsoever in these as investments. I cannot imagine holding these on any long-term view. There is short-term momentum. There is essentially dumber money coming in after you, but at some point that stops. So, well, my point is on a lot of things like Tesla and Bitcoin, I think that they are very good trades. They're very good short-term trades. Just don't confuse them with long-term investments. When the momentum turns, I would take my profits.
Well, I remember that dot-com thing. A investor who was a leader, and he's still in good position, as a not-for-profit organization, he transferred $250,000 worth of a stock. By the time a stock, coming through a particular entity to another entity came, it was worth $15,000.
Oh.
And we planned based on $250,000.
Oh my word!
So we didn't have any of that, but we saw where it started, and within I think few weeks when actually it landed, what value and worth it has. But here's the thing. You know, there are scholars and professors talking about cryptocurrency and in detail. The UK Financial Conduct Authority says it has warned electronic currency investors that they are in danger of losing all their money. Whereas Visa and MasterCard, people who deal with money and very conservative institutions, are going in it. So why you're standing so skeptic of the whole thing?
As I said, I still don't understand any purpose to it. I can transfer money using the regular banking system from the United States. I'm half British, and I can transfer money to family or friends or vice versa to the UK online using the traditional banking system for minuscule fees. I don't. If the banking system was charging an enormous amount of money, then I can understand someone saying, "Look, you can use Bitcoin and you won't have to pay that money." I can understand that. You know, I bought Amazon stock in 2002 when it had collapsed. I bought it at $12 a share, and I thought I was an idiot because it went down to $6. Unfortunately, I actually am an idiot because I cannot own Amazon stock really and be a journalist. So I had to sell all my Amazon stock in 2006, 2007 when I became a full-time financial writer. So unfortunately, I don't own millions and millions and millions of dollars worth of Amazon stock, which I would if I just held on. But I understood the minute I first started using Amazon in 1998. I understood the utility of it. I remember actually one year buying Christmas presents for my niece who lived in America when I was in London. And one year I had to go out and buy them all at a toy store in London, and then package them up, and then put them in a box and fill out a customs form. Incredible! It took me an afternoon. And a year later, I used Amazon, and it took me about 20 minutes. I understood the utility of Amazon right from the start. I don't understand why, as an individual, whether I'm shopping or I'm transferring money or I'm saving money, I don't understand why I need Bitcoin. I don't understand what the purpose is. And people keep coming up with these explanations that make no sense. Some of them are political. They say, oh, well, it's independent of the political system. Well, that's true, but that's also true of gold and silver. It's also true of owning multiple currencies. I do understand the advantage. Gold, by the way, I've always thought should be viewed as a currency, not in relation to stocks and bonds, but gold is a currency like dollars or pounds. So I understand that, but that doesn't really explain why Bitcoin, and I don't have any faith in it. In terms of
but wait,
yeah.
wait, Brent. Don't you see that there was a time when people will barter things? At that time, somebody came up with a piece of paper and he said, hey, what in the world is this piece of paper? Why do I need that? I'm fine without it. So a visionary guy named Elon Musk is putting $1.5 billion in there, and he's about to take me to Mars. And here's Brett, who simply want me to stay on Earth.
Look, I got no problem with going to Mars, and I got no problem with Teslas. All I'm saying, look, you talk about, it's interesting, talk about banknotes. There's actually a debate about how these started out. And there is a theory they were actually created by governments, and that there has never been a genuine barter economy. I'm not getting into that, but banknotes originally were certificates saying that you had gold. So, instead of actually me having to go and give you, 10 pounds worth of gold or a kilogram of gold, I could give you a certificate saying, Joe Smith, the banker, was holding a kilogram of gold on my behalf. And you could then basically, that was where the original banknotes came from. And in fact, they used to basically say a pound, the British pound, used to mean a pound of gold. The point is, you can buy and sell things using dollars or yen or euros or any other currency. You can buy and sell things in terms of gold. I don't understand why I have to, or why I would want to buy and sell things in terms of Bitcoin. I understand why companies that want to jump on the marketing bandwagon would accept it. I actually understand why, if I'm MasterCard or Visa, if someone says, look, I want to pay you in Bitcoin, that's fine by me. I don't care how I get the money. I will immediately convert it to dollars or euros. But I don't understand why I, Brett Arends, need to own Bitcoin, except, of course, for the benefits of a short-term trade. Obviously, if I had bought Bitcoin a year ago for, what was it, $3,000, and today it's $50,000, I'd be rich. My point is, I don't understand why. I mean, that could be true of lots of things. I don't understand the fundamental utility, and people tell me various stories, none of which really add up. They don't have the utility that I noticed immediately I started using Amazon. And I was using Amazon, I wouldn't say I'm an old man, but I was using Amazon way back before almost anyone I knew. And I was using it all the time, and I got the utility immediately. It was useful. It met a human need of mine. I was able to order books in some cases. I was able to order books internationally back before that was a common thing. The way Amazon.
Well, you're putting all the books in the background and to the level that I have to start ordering at my office address. So my wife says, you're not reading enough, you're buying more. So yes, Amazon, everybody understand the utility. So your main point is cryptocurrency utility people don't understand, but if they're doing short trade, keep doing it until it is going upside down again.
Look, if I weren't doing my job, if I were not a financial journalist, I would have been trading Bitcoin during the bubble of 2017. I actually wrote about that at the time, and I'd be doing it now. I'd own it. I'd be riding the bubble. I'd be making short-term profits on the basis that, look, the more and more people see something going up. They see something that's gone up from $5,000 to $50,000. They meet neighbors or friends or family members who've made money on that trade, and they say, "Oh, I want in." And they buy in, and that drives the price up further. That is unfortunately a Ponzi scheme ultimately, because the system itself is not generating any profits. It's not generating any economic profits like dividends, and it's not generating any utility. It is just sitting there. So we could be bidding on a pet rock. I could pick up a rock and I could say, I'll sell someone this rock for $5. And he'll buy it, and then he says, "Oh, I'll sell it to someone for $10. Look, the price has already gone up," and eventually it could go up to $50,000. But ultimately, it's just a rock.
So who is
Sorry.
regulating it? Who is watching out for the a naive guy's interest, and what is the tax situation about it?
Well, the tax situation is interesting. If you own Bitcoin, certainly as an American, you want to do this in your IRA, if at all possible, because otherwise you're going to have to fill out a lot of paperwork, and short-term profits are taxed as ordinary income, whereas long-term profits are taxed at more favorable tax rates. So basically, if you're going to make short-term money, you want to do it inside a tax shelter, if at all possible. In terms of who's looking out for the regular Joe, I'm sorry to say, I don't think many people, and the events of the last year have once again shaken my confidence in the ability of the elites and the governments to be on top of what's going on. I remember having a conversation a few years ago during the last Bitcoin bubble with a very senior member of the British government who I knew personally, and he didn't seem to be fully aware of just what was going on. And I said, look, the thing about Bitcoin and cryptocurrency is it's very, very good for doing illegal things. If I want to launder money, if I want to pay someone to assassinate my next door neighbor, if I want to buy illegal child pornography, if I want to do all sorts of things that are illegal, and I don't want my bank details involved at all, then cryptocurrency can be really, really good, can be very useful. Other than that, I don't really see a use. I said to him, look, there are only two things that are going to happen here. Either the cryptocurrency bubble is going to burst, in which case lots of regular Joes and Joannas are going to find that they've lost their shirts, and the government didn't do anything to prevent this, or the cryptocurrency bubble is not going to burst, in which case you've essentially just sat by while a shadow financial system has been created that allows people to finance terrorism, violence, murder, illegal activities. Two of the things that have played an instrumental role in the rise of cryptocurrency, the first was drug trading, or drug dealing on a website called the Silk Road that was shut down. People were essentially buying illegal drugs online. And the second thing is ransom. The ransom hackers go into the computer systems of hospitals, local governments, all sorts of institutions, and they take over their computer systems and they install virus. And they say, look, we will, your data is going to be wiped clean. You are going to be essentially shut down unless you pay us $10 million in ransom. And obviously, we can't ask you to wire that money into our bank account because then you know who we are. So you have to pay us in cryptocurrency. And that's a second major utility of cryptocurrency. So when I said earlier I didn't see any utility to cryptocurrency, I should have been clearer. I didn't see any legal, socially productive use of cryptocurrency. It's certainly useful for illegal activities. But basically, you have a system where either people are going to lose their shirts, or we're going to witness the creation of a completely unregulated shadow financial system.
Brett, you have completely slaughtered the cryptocurrency, and we'll take a short break and we'll come back and we'll talk about the regular investment and somewhat of a day trading and things of this nature. Thank you so much for being with us. We'll be right back after these messages.
My pleasure.
Assalamu alaikum. My name is Adam. You remember me? I appeared in so many episodes that Sound Vision has put on the market. No matter what. Hey, what's happening? Hey, oh, sorry. Lockdown is what it is. Well, continuing here. In this lockdown, Sound Vision never stops thinking about you, the viewer. We'll have to get back into production again, online and inline. Everybody in their own space, even me. Although I'm stuck with Lanisa.
Salam! Salam! Salam!
I know, you were shocked too. Well, let me continue. This is what I was going to say. Salam! 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 Cut! 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 Finally, I get my own screen time again. Thank God. And so we invested in new equipment to bring you even better production with new songs and new singers and animations. Well, here are a few clips. And Sound Vision has brought all this into your home, making Islamic values and teachings easy. And if you know me, Adam, a multi-talented actor, well, sometimes I'm an actor and the reporter and the... Oh, that's enough. Let's move on to the next section. Well, you can watch these new episodes on our new app at www.adamsworldapp.com. We have previews happening every day on Muslim Network TV. Sound Vision has been serving generations, moving and changing with the times. We are all faithfully connected. That is a huge blessing. Your donation helps keep these programs available now and into the future. We take this job of helping tomorrow's Muslims today seriously, and you should too. Today, we need your help. Children absorb and learn from everything they encounter. Make that wholesome, positive, grounded in our faith. Together, we can accomplish our goal of raising better Muslims, better neighbors, and better citizens. Please donate generously. It's an investment in our future. But to finish, let me tell you, there are new scripts of my new mission. And it is something that I enjoy talking about. My new mission is space. Houston, we do not have a problem. Salam, see you soon. Me too.
My wife, who she's a professor at the University of Cincinnati, who's Catholic, and by her watching and listening to our 3-year-old son watch Adam's World, she ended up taking Kalima Shahada. She embraced Islam because she learned so much about Islam and the other prophets. It really affected our life in a great way, and because of Sound Vision and Adam's World, we're Muslims.
I took my Shahada 15 years ago, and I actually am from a rural part of Ohio. And so I found the catalog for Sound Vision, and I ordered the tapes and the CDs and the books, and I used those, and especially for my little daughter, that's how we basically learned our Islam, and Islam entered our hearts through the wonderful works of Sound Vision.
Okay, assalamu alaikum, brother. I just want you to know that I love the Sound Vision website, that a lot of times when I'm looking for information, especially as it relates to homelessness, domestic violence, and women issues, I go to that website, and then I see what you've written, and then I copy and paste it, and spread the word, because the wisdom is there, so I can't do any better than what Sound Vision has already done.
Sound Vision is our survival guide. It is the organization that provides skills for Muslims how to survive and thrive in this community here in the U.S.
Assalamu alaikum, my name is Anam, I'm in 11th grade, and I grew up with Adam's World, and what it taught me was unity, respect, and love for the Muslim Ummah.
Adam's World is the greatest show ever made. Take me to the Kaaba, man. I love that puppet.
Welcome back to Muslim Network TV. We're talking with Brett Arends, who is an award-winning financial writer. And we have been talking about cryptocurrency quite a bit, but let's talk about little good old money in your pocket. So how one person should go about making money other than working for someone at this time? How people should seek advice? Is Professor Google a good fellow?
Professor Google has a lot of flaws. It's driven essentially, whenever I go on Google to find the latest stories or the latest information about a particular investment class or like exchange traded funds, I'm always struck by how the top search results are all essentially quite misleading. They are driven by a desire to get eyeballs, essentially. What are the best exchange traded funds to buy in February 2021? It'll say, and then you click on it, and it's just a list of exchange traded funds. It's got nothing to do with February 2021. So I'm not an enormous fan of Professor Google as an sort of a blank, just going online and saying, how do I invest? I'm struck, actually, I was looking at a survey the other day. I'm struck by how many people, particularly women, will say to surveyors, I have no idea how to invest. The amount of people who leave school without having the basics in finance, I do wonder what people are actually learning in school, because they don't seem to be learning things that they need to know for the rest of their lives. The basics of finance are not enormously complicated. The good news is that actually the people who complicate finance tend to do worse than the people who keep it really simple. It is a long established and mathematically demonstrated principle that most of the people who are actively managing their investments end up doing worse over the long term than people who just bought and hold a simple portfolio. I would not, if I were starting from scratch, I would go somewhere to a well-established firm. Vanguard or Fidelity are two that spring to mind, and I would talk to someone there. and I use an online broker, money manager. The fees now are very low because they have to compete with the online people. The advice won't be spectacularly unusual, but it is very unlikely to be advice that you're going to end up regret, because these companies do not want to get sued. So they will almost certainly direct you to a simple portfolio of a handful of exchange traded funds, low cost funds that will essentially that will invest your money in an array of assets, the most obvious being stocks and bonds. That's essentially, for 99.9% of the world, that is really all you need and all you need to know. What disturbs me are the number of people who don't do that, who sit in cash because they don't understand investing at all. You end up, not necessarily this month or next year, but you end up over the course of your life missing out on huge gains, and you end up losing money to inflation if you just sit in cash. And I'm disturbed by the number of people who do sit in cash, and also the number of people who, when they decide not to sit in cash, go to the other extreme and start day trading stocks. They start buying and selling, Bitcoin or Tesla or companies that they know nothing about, doing it, day trading it, doing it on Robinhood and other apps, whose appeal, once again, I don't particularly understand. They would make sense if the traditional the traditional operators like Vanguard or Fidelity or whatever were charging high fees, but they're not. You can now, at a regular broker, a regular money management, brokerage account, money management firm, you can buy for $5 or $10 a stock or less. Or sometimes, in some cases, the funds themselves there's no transaction fee. So there's really no reason to go anywhere off the beaten path. And I would go to somewhere, a traditional place like Vanguard or Fidelity, and talk to them.
So how to find a right financial advisor?
Right. Well, look, the thing about financial advisors, the real utility of financial advisors is actually a combination of life coach, but also making sure that you have that everything fits together. You do your insurance, your tax shelters, savings for your kids, all the rest of it. It all fits together. There are credentials out there. I'm a chartered financial consultant. There is a slightly better known one, the CFP, Chartered Financial Planner. Those are qualifications people take that will tell you they've passed various tests, both of knowledge and of integrity. There's also an element of word of mouth. You can talk to people. I know people who are financial advisors, and they get most of their new business through word of mouth. People hear from someone, oh, so-and-so has been helping me with my finances for a long time, and they go to them. That is not a bad way of doing it. The letters after the name are only a small part of the equation. What you really need is someone with experience, someone who's going to listen to you, and someone you can trust. So going to someone who is referred to you by people who you know and trust, and who has been in the business for a long time, these are also valuable attributes.
Now, what is robo-advisors?
Robo-advisors, it's a very interesting development. Essentially what they've worked out, a number of startups worked out that a lot of the financial advice that you get is, particularly when it comes to investing, is sufficiently, it's now pretty orthodox, it's pretty standard. It's the same. You go to 10 different financial advisors and you tell each of them that what your risk tolerance is and what your situation is, and you talk to them about who you are and where you are in your life's journey and so forth. You're likely to get 10 investment portfolio recommendations that look very similar. There are obvious reasons for that. And robo-advisors worked out that essentially you could cut out the middleman and you could do it electronically. So you can go online and they can tell you this, that, and the other. My two concerns, or number of concerns with robo-advisors. One is, and there's nothing intrinsically wrong with the idea. The first is that they don't provide any, I understand they don't provide the broader overview. When I did a lot of postgraduate qualifications in financial planning and financial advice, I took a lot of courses. It's interesting how much of your financial health is not related to your stock market portfolio. It's, do you have the right insurance policies? It's, do you have the right plan? Do you have the right things in place for your spouse, for your children, and so forth? The second thing is the robo-advisors do not provide a valuable coaching function. Friends of mine who are financial advisors, the good ones, spend a fair amount of their time coaching people, coaching their clients on, not saving so much money, coaching their clients on not, giving too much money to their adult children, coaching their clients on doing, it's like, look, it's like the, when you join a gym and you get a personal trainer. The main function of the personal trainer isn't to tell you how to use the gym equipment. The main function of the personal trainer is to make sure you show up once a week and use the personal, and to push you. Is to basically to be a coach, to be a partner. And financial advisors, human financial advisors, do that. And the older I've got, the more convinced I am that that is the number one value of a financial advisor. Knowing how things go together, the whole chartered financial consultant, chartered financial planner, sort of body of knowledge about insurance and all the rest of it, that's valuable. The investing stuff actually isn't that valuable because it's supposed to be relatively straightforward and simple, which is what the robo-advisors do. But it's the life coach, it's the personal coach, it's the financial coach. That's the missing ingredient that's really important.
Now, do you agree that economic recovery will crash the stock market?
No, I don't. What worries me most about the stock market is as I said, the enormous amount of exuberance, the mania, the animal spirits, how everyone is bullish and everyone thinks things are going to go higher and higher and higher. That is usually a warning sign. The recovery, look, a large amount of the economic recovery has already been anticipated by the stock market, which has gone up exponentially since the panic of March a year ago. So it's gone up a long way. I don't think that we're now essentially, the bigger danger is that there won't be a recovery. The one issue to watch out for is if and when the recovery gathers speed, if that drives up long-term interest rates, if essentially that affects the bond market, if the bond market starts to worry about inflation, and it's not at the moment, but if it starts worrying about inflation, and if it starts driving up long-term interest rates, that may affect the stock market. Because one of the factors driving up the stock market is the knowledge that the Federal Reserve is just going to print money and the federal government is borrowing and spending, and they are essentially flooding the system with all the money that it needs.
So you would say that instead of economic recovery, better variable is to watch Feds, what they are doing with interest.
Yes, but really what you want to watch, what I watch are long-term interest rates and long-term inflation expectations. James Carville, who was an advisor to Bill Clinton when he was president back in the 90s, famously said that if he came back in another life, he said when I was a kid, I always thought if I came back in another life, I wanted to come back as like a famous athlete. But actually, I want to come back as the bond market because you can intimidate everybody. What do you want to watch is the bond market. If the bond market starts to worry about inflation, what is likely to happen in that situation is that long-term interest rates will rise and inflation expectations in the bond market will rise. And that is more likely to have an effect, negative effect on the stock market. That's more important than, the Fed tries not to surprise people. They try to signal things so that by the time the Fed minutes come out, or by the time they come out with their latest announcement, the market already has a good idea of what they're going to say. Where it shows up is in long-term interest rates.
Tell me, the conservative advice will be to people you don't know, so you stay out of day trading.
Mm-hmm.
But the whole mania which was created by Reddit groups, it was all based on day trading.
Yeah.
And probably there will be some other people who keep saying, okay, yes, stay in until they cashed out and left their other kids in that group. But what is 101 of day trading? How do you actually do it?
The 101 of day trading is don't do it. It's like, what is the 101 of taking heroin? What is the 101 of taking, crack cocaine? Just don't do it. I don't know anyone who's done it and kept their money. During the GameStop mania, people were buying stuff that they didn't understand. And I wrote an article. And I said, look, take your profits. The stock, I can't remember what the numbers were now. The stock had gone from what, $3 to $400 or whatever it was. And I said,
almost 485, I think.
And all these people were saying, you don't understand. It's not about the money. We're trying to send a message to the hedge funds. And the answer to that is, look, if you don't make a profit from the hedge funds, then they end up making a profit from you. So you haven't sent them any message at all. The only way you send them a message is by making money at their expense. Otherwise, you could just send them a tweet. So anyway, people hung on. I'm sending a message, and they ended up getting hosed. So this was not even that interesting a story. It happened so many times, and of course we'll now have hearings about it. And it's gambling. It's like going to the casino. It's like going to Las Vegas. You might as well just go to Las Vegas and bet on roulette.
So liberals and conservative came together, well, some of them saying leveling the playing field.
Mm-hmm.
So that issue of equity came while that mania was going on, and probably is still somewhere there. So how do you think field could be even for playing field could be even for individual investors as compared to institutional investors?
When it comes to day trading and short-term trading, the playing field can never be level. You are competing with people who do this for a living, who have paid, in some cases, vast sums of money to have high-speed data connections that give them, the information a third of a second faster than you're going to get it, and have huge computers that will trade on that information. It's a bit like saying, how can I level the playing field between a high school football team and a team in the NFL? And the answer is you can't. They're bigger and they are trained for this, and they're doing this full time. It's a crazy, crazy thing. I've never had any desire to day trade. I've never understood the appeal of day trading. If I want to gamble, I will go to a horse track or I will go to a casino. This day trading, look, there's short-term momentum in the markets, and buying stuff that has been rising is one thing. But day trading, actually trying to get in and out within 24 hours or within 12 hours or within 3 hours, it's crazy. You are at this point today, you are competing with supercomputers. You're not going to win.
Is the stock market contributing to income disparity in our country?
Yes, it is. More importantly, it's contributing to wealth disparity, because most of the stocks in the stock market are owned by the distribution of ownership is skewed, obviously, to the rich. Rich people own a disproportionate share of the stock market. So when the stock market goes up, they make more money than people on Main Street, many of whom aren't in the stock market at all. I don't know, the short-term response to that is, well, look, if the stock market goes down, there's greater equality. Well, I suppose that's true. That doesn't, we're hardly going to want the stock market to go down. I mean, in a depression's a great levelers, but no one wants a depression. So a rising stock market it certainly encourages or contributes to rising wealth disparity. That doesn't mean that it's necessarily a bad thing. On the contrary, when the stock market goes up, it encourages investment, which encourages economic growth, which benefits people lower down the distribution. My own beef about this is that we have a tax system that is still oriented towards income rather than capital. I don't understand why we tax someone who makes $1 million a year more heavily than someone who has $100 billion in stock. It doesn't make any sense to me. I would much rather have a property tax on stock the way we have on homes. I mean, I pay a percentage, my home, and I'm sure your home and everyone's home is assessed locally at its value, and you pay essentially a percentage of that every year as taxes to your city or municipality. No one considers that to be socialism. No one considers that to be crazy. It's a relatively simple system. You are able to minimize your property taxes by living somewhere smaller. People who are very wealthy don't particularly want to do that. Someone who has $100 billion worth of stock, I don't see why they don't pay a percentage of that every year as their tax bill. And someone who has $100,000 of stock would pay a percentage of that as their tax bill. And you would have essentially a flat tax rate that was also incredibly progressive in the money it raised, because, of course, an astonishing amount of the wealth is in the hands of a relatively small number of people. Good for them. That's great. However, I don't see why they should be somehow paying a lower tax rate than other people.
Tell us one more. I get a couple of other questions, and we have a few minutes. What is the difference? I mean, 101 of value stock versus growth stock.
Right. This is a great question. This is actually one of my favorite questions, and it's, as always with the stock market, these are mathematical equations that no one's ever going to solve because they involve human psychology as well. Generally speaking, academics, theoreticians divide the stock market, any stock market, roughly try and divide the stock market into two groups. On the one hand, you have so-called growth stocks. Those are stocks that, as the name implies, the business tends to be still in a growth stage. It's still early, or it's young, it's still expanding, it's gaining market share, it's in a new business, Tesla being an obvious example. These stocks you tend to pay a lot more for in terms of present income. In other words, you're paying up for growth. So, the price of Amazon has always been, factored in a lot of its prospects for growth. The other half of the economy, the other half of the stock market, are so-called value stocks. These tend to be mature or more boring businesses, and they tend to be much cheaper in relation to this year's earnings or next year's earnings because there's not a lot of excitement. So it's the difference between buying Tesla or buying a utility stock. A utility stock, you get a big dividend check every year. You may be buying the stock at 10 times next year's forecast earnings per share because there's no growth, there's no excitement. There's nothing. It's not going to double in value. It has none of the characteristics of buying a lottery ticket. You're not going to make a big score next year owning a utility stock. On the other hand, you buy something like Tesla, and Tesla at the moment, I think you are paying something like 100 times next year's forecast earnings per share. You're paying an enormous amount of money in relation to the current size of the business because you are essentially betting that the company is going to grow, and you're paying a lot extra. So you're buying a more expensive stock because you think the company is going to grow into that valuation. So what has tended to happen over time is that the market has gone from being very excited about value stocks and thinking that it loves the idea that they produce these, generally speaking, steady dividend checks and steady earnings, and then falling out of love with them and falling in love with growth stocks. So back when, after the dot-com bubble was all about the growth stocks, right? They collapsed. It turned out a lot of the companies that were supposed to grow shrank to nothingness. They went bankrupt. They were high risk, high volatility. Many of them went bankrupt. So at that period of time, there was a huge rush to buy value stocks because they were very cheap, and people were saying, "Oh, look, I can buy a utility with paying me 7% a year in dividends, or I can buy a tobacco stock paying me 7% a year in dividends, and there's no risk." So there was a huge stampede into value stocks, which then went up and up and up. And then it went the other way. We've had a big boom in growth stocks over the last, I think, 12, 13 years. It has been probably the biggest ever. Growth stocks in relation to value stocks are higher than they have been certainly since 2000, maybe ever. So right now, growth is very much the flavor of the month. It is interesting, there is some debate about this, but generally speaking, most of the data has argued that over the very long term, value stocks have tended to be better investments than growth stocks, because investors have tended overall, on average, to overpay for the exciting stocks of tomorrow. They have tended to be over-enthusiastic. They've tended to pay too much. During the dot-com bubble, Cisco Systems traded at one point at about 100 times forecast earnings. Tesla's there now. Cisco has carried on growing as a business over the last 20 years, but the stock collapsed because it just wasn't worth those prices. So over the long term, investors have tended to do better from value stocks than growth stocks, but there is some debate about whether that will be true going forward. All I can say is right now, growth is very much the flavor of the month. Value is very much out of fashion. My own investments are now heavily oriented towards value, simply because I think growth is too high and value is too low.
Well, thank you so much, Brett Arends. You have been helpful. I hope people watching have enjoyed a conversation with you. And I don't know, because of your conversation, if the cryptocurrency has gone really nosedive or not, but
very unlikely.
Well, thank you so much. Brett Arends,
great to be here.
Award-winning financial writer. He's also a chartered financial consultant. Thank you so much. And thank you for watching. This is 24/7. Stay tuned for other programming on Muslim Network TV, which is always there on Galaxy 19 satellite, Apple TV, Amazon Fire TV, Roku, and our own website and muslimnetwork.tv, or you can Google it, YouTube, or download our app on your Android or iPhone, Muslim Network TV. Thank you so much for Sherdil and Dr. Abdul Wahid for producing today's show. Peace and salam.